Hi, this is Craig McCrackin. I'm the global leader of our finance, accounting, and procurement group at Conduit, and I'm here with Phyllis Saavedra. Phyllis is our order to cash practice director, and we're here today really to talk about strengthening working capital and really focused on the accounts receivable side of the balance sheet, specifically cash and accounts receivable. So Phyllis, I know obviously we have in discussions with our clients and companies every day about this. What's interesting in regard to strengthening the working capital? What are those discussions focused on that you see every day?
Yeah, Craig, I talk to clients every day. We both talk to clients every day. And really, there are three things that I think are most important when I think about AR and I think about the balance sheet and I think about working capital. Um, Really, it's how you're managing that working capital, how you're managing that AR. Secondarily, and probably most importantly, and you're going to hear me say this a number of times today, it's optimizing your people, process, and technologies. And then lastly, it's how are we seeing our customers deal with the COVID and how are they dealing with all, historic financial crises and planning for those kind of events.
Yeah, and we mostly hear about on the accounts payable side, Phyllis, of deferring the terms of payment, let's say. Today we're going to more focus on the accounts receivable side and really how to enhance and optimize the accounts receivable department to improve working capital. And with that, maybe you can go into the first point you made, which is really looking at accounts receivable specifically and how to improve the cash flow there.
Yeah, and it's funny you brought up AP, Craig, because really, healthy AR gives you that money to pay that AP and also potentially take advantage of early pay discounts and things like that. And that's where you get into that whole working capital cycle. But, specifically as it relates to accounts receivable, there's a couple things that are really important. It's being able to forecast that cash flow and know the health of that AR. All of that leads you to have enough money, available so that you can meet your day-to-day expenses, you can grow your business, you can utilize it for merger and acquisition activity, and you can fund really those daily operations of your business.
Yeah, and I think as we look at working capital, obviously with the pandemic and years ago with the financial crisis, it becomes more and more prevalent that you got to make sure you're prepared for any crisis that's around the corner and make sure that you have the right processes in place. As you mentioned, we joke about it all the time, right? People, process, technology, but make sure the processes are right in place as far as getting closer to the best practice, making sure you have the right skilled people, and making sure you have the right technology and that you're using the technology properly. I think those are the most important things as I look at it from my perspective as we analyze clients and their whole process, whether it's credit, collections, cash application, disputes, etc.
No, I would agree, right? I mean, when you think about it, especially if you break it down into those three areas of people, process, and technology, your people are key, right? That's the biggest investment you make in your business. Whether you're utilizing your people in a shared service environment and taking advantage of all of those synergies that you get from like processes. So maybe moving your cash application or your invoicing to a shared group, utilizing, resources in a single location or a less expensive location, whether it be outsourcing, which is something that, that Conduent does. Conduent is sort of, we look at it as this hybrid environment where we take advantage of shared services. We utilize that bench strength and senior leadership talent from our clients, but then we also are able to use the synergies of the lower cost, more manual processes and do these in a lower priced, environment. And when I think about people, and my true investment in the quality of the labor force that we have, it always comes down to training as well. Whether you put whether you do a shared service environment, whether they're captive or outsourced employees, it really is about training, onboarding training, making sure that they understand your company's best practices, and then providing ongoing training so that your people can adopt and adapt to the latest and greatest things happening in the world.
Yeah, and it's funny you bring up the people side of it, and we've seen it over and over again, Phyllis, where you got to make sure you hire the right people with the right skill sets, as opposed to just someone that's experienced. And so I think it starts with that. Then as you go into process, it's really looking at how the work is done today and really trying to figure out how to improve that process to get it closer to, world class and best practice. And sometimes it's just little changes that can make a big difference.
Yeah, I mean, we do this all the time. You know, we look at the process that people are doing. Oftentimes, when you talk about accounts receivable, the process really begins on the front end. It's all about how you onboard that customer. I'm working with a client that they have some extremely past due accounts receivable. And what we found is, a good 70 to maybe even more than 80% of their accounts receivable issues are all about onboarding, how they set that customer up, knowing, what kind of taxation that customer has, getting it on the right ship to and bill to, order entry, getting the right products and the right SKUs, and whether it's professional services, the right timing, and all these things. That front end process is really what drives that ability to collect that AR. And then when you've got, once you finally fix those front end processes and you start looking at the back end, this is where really we can, we start thinking about technology more and the process of how we approach our collections. So are we segmenting to the right population? Are we automating letters and statements to our to our customers? Are we giving self-service access for invoices and statements to our customers? All these different kinds of things. I mean, accounts receivable, I would say, is probably one of those areas that benefits most from expertise in people, process, and technology.
So if you kind of do it, one of the things that we first start with is looking at their DSO, right? The day sales outstanding. And for most, a day, depending how big the company is, but a day could be millions of dollars worth of cash flow if you can bring DSO down a day. So every day you bring it down, it's millions of dollars of cash flow that comes back into the company that they can use for whatever they need. And so that's really where we try to analyze end to end the whole order to cash cycle and try to improve it to bring down DSO. And maybe you can talk about your thoughts on DSO as well, Phyllis, because it pertains so much to working capital, right? It is the thing that really measures how that cash is coming in and improvements in the process.
Right. Craig, I mean, it's funny. You bring up the good point of it's millions of dollars. We talked to a potential client yesterday where one day of DSO was equated to $100 million. Imagine speeding up the life cycle of your business such that you could have an additional $100 million to spend for the growth of your business. Managing DSO comes from everything, like I said, from that onboarding process, knowing your customers, trying to minimize extended payment terms and things like that. It's onboarding, getting the right customers, collecting from your customers in a timely fashion, but it's also, making sure that you can, reach out and touch all of those customers. That's where the technology really plays in. And then quickly being able to get money applied to an account and reconciled very quickly, managing disputes. There are a whole bunch of end-to-end processes that really do drive DSO. I would say it's an important metric. It's not the only metric in accounts receivable, but it will tell you really, the health of your operations. And when I think about the health of the operations, when I see the clients that have done, really well during the pandemic or other financial crises, it's been those those companies that have been best able to manage their accounts receivable really well.
So, Phyllis, the one thing to really emphasize, as you mentioned, is the process, people, and technology, especially the technology, and making sure companies are utilizing what they have effectively, or maybe they need a next generation technology that has all those analytics and predictive analytics and the reporting and the automation that you need. But I think, Phyllis, those are the three areas that we talk about all the time: people, process, technology. And I think those are the things that companies need to look at today to make sure that they're ready to mitigate the risk of another pandemic or financial crisis, and make sure that their accounts receivable is strong and that they're, basically can improve their working capital. And, just get your final thoughts on the kind of what we're talking about here, Phyllis, on really improving working capital.
Yeah, Craig, I think you hit the nail on the head. It's that planning, for the next pandemic or the next financial crisis. And from my perspective, there are really 2 points that are important. Know your customers, make sure you're watching industry fluctuations, manage the risk of your customers, really identify those key customer relationships and maintain those. And then from your own internal business perspective, look at areas that you can cut costs while at the same time maintaining growth of your business, and really be prepared for unexpected sales volumes, right? So if your business is growing during a pandemic or stagnating during the pandemic, really being prepared, and healthy AR and AR that is predictable and managed well is the best way to plan for the next pandemic or financial crisis, in my perspective.
Perfect. Phyllis, thanks for your comments, and really appreciate everything that we discussed today, and hopefully helpful to others as well of where to focus their time and energy as far as being ready for the next pandemic and managing working capital effectively. So thanks, Phyllis.
Thanks, Craig.